What's a great way to diversify your real estate portfolio so you still get great cash flow, but without the headaches or the legal risks of having a constant stream of tenants? This may be my favorite type of asset of all, my friends, and I'm going to tell you about it right now. I am Brian Ellis. This is episode number 207. Hello, SDI Nation. Welcome to the podcast of record for savvy, self-directed investors like you, where we help you to find, understand, and profit from exceptional investment opportunities. Hey, be sure to check out today's show notes page at sdiradio.com/207. One of the things you'll find there is a link to my first article for thestreet.com, a major news website that focuses on stock market investing. It seems they wanted to get some perspective about the real estate world, and they feel that yours truly will bring them a big audience. And I am betting that's correct. Again, that link is sdiradio.com/207. Now, in the last couple of days on this show, it's been a little downcast, I'll admit. The ugly lawsuit going on in Virginia against that landlord who made the unthinkable mistake of demanding background checks. And yesterday's discussion of the harsh reality that Uncle Sam's not on your side. Well, I know that's a mouthful of bitterness to swallow, but let's return now from the land of gloom and doom to focus on what we all love, investments that are simple, safe, and strong. Today I'm going to tell you about my favorite asset class of all, real estate notes, but let's not bore ourselves with discussions of LTVs and interest rates and principal balances. No way. Let's go on to a story, a rather great story about a wonderful, amazing, magical golden box. Here's the story. You're visiting Omaha, Nebraska, headquarters of Berkshire Hathaway, the investment firm made famous by super investor Warren Buffett. You're there for Buffett's annual shareholder meeting. This event, if you've ever been to it, it's totally unlike any other shareholder meeting in the world. People come in from all over the world to attend, and these are very smart, really well-informed, well-connected people who attend this event. They attend it because they're going to get the chance to hear from the man himself, the Oracle of Omaha, the one man on the planet who's revered as something nearly godlike in the investment world, and that is Mr. Buffett himself. Buffett always uses this meeting to give his impressions of how he's performing as manager of Berkshire Hathaway, and he also talks more broadly about the state of the stock market and the economy and the world as a whole. And look, when Buffett speaks, people listen. And that's why you're there. You're there to learn from the man. So, much to your delight and surprise, Buffett grabs you by the arm, pulls you into a private room and says, "Look, I've got a magical box made of pure gold. This box is magical because every month for the next 30 years, it's going to spit out $1,000 in cash. Just works automatically, no effort's required from you, plus the box itself is worth $150,000 just because of the gold content. I'd like to sell this box to you for only $100,000. Do you want to buy it?" So you think it over, and honestly, it's kind of a no-brainer. You get $1,000 a month for the next 30 years, and the box is worth $50,000 more than you got to pay for it. And if that wasn't enough, it's none other than Warren Buffett recommending it to you, and his reputation is just solid gold. So you tell Mr. Buffett, "Yeah, I'd like to buy that magical golden box from you." Then he looks at you and says, "Great, but here's one little catch. 30 years from now, I get the box back." Well, that puts a little bit of a curveball in your plans. You were secretly considering just flipping this magical golden box to capture as much of that $50,000 profit as possible. But it turns out that could be tough since Buffett gets the box back in 30 years from now. But you put pencil to paper, you do the math, and you realize that it's still a really solid deal for you to get $1,000 a month for the next 30 years in exchange for $100,000 now. But then something else really important occurs to you. So you ask him, you say, "Mr. Buffett, what happens in the event the box stops working correctly and doesn't continue to pay me $1,000 a month? What then?" And with a gleam of pride in his eye, Buffett looks at you and says, Now you've asked the right question. I promise you on my word, you'll get $1,000 a month for the next 30 years. But if something happens, for some reason you don't get your monthly payment, then and only then can you sell the box to recoup your investment and your lost profits. So you noodle the whole thing for a minute and you do a little more math. And what you see is that the deal that Buffett's proposing to you it's simple because you're getting $1,000 a month for 30 years in exchange for a $100,000 investment. That's simple. It's safe because if for some reason your money doesn't get paid, you can sell that box. And that box is worth $50,000 more than you paid for it. And it's strong because according to my trusty dusty handy dandy financial calculator, the yield you'd be receiving on your money would be 11.63%. So that's really Very nice. So that's it. It's a simple, safe, strong deal, and it meets the basic criteria that we espouse here at SDI Society. So why this mythical story about a magical golden box? Well, it's because it's really a story about how real estate notes work. A note's just a financial instrument that entitles its owner to a cash flow, payments from a mortgage. And just like that golden box, if you don't get your payments, you can sell the asset itself. In this case, the house that the note's attached to, and you get your money back. The opportunity lies in the fact that notes are what's called negotiable instruments. In other words, they can be bought and sold. You could sell the cash flow, the monthly payment stream, to somebody else for what you paid for it, or for more than you paid for it, or for less than you paid for it. And if you get your payments as promised, it's all good. If not, you can sell the house that's attached to that note and get your money back that way. So it's really safe. That's how the gold box works. That's how notes work. The level of flexibility you have with these things is really just astonishing. Now, we're not going to get into the complexities right now, but let me make this really clear to you, my friends. There's simply no more flexible type of financial instrument than a good real estate note, in my humble but entirely accurate opinion. The options are just astounding. These things can be engineered or re-engineered to give you precisely the level of simplicity, safety, and strength that your portfolio needs. But how do you find them? Patience, my friends, patience. I'll cover that in tomorrow's episode. As for now, I have a favor to ask of you. Hey, please consider stopping by our new YouTube page and liking and subscribing to our YouTube page, because there's now a video version of this very show that I'd love for you to check out. It's over at sdiradio.com/YouTube. So please go over there and subscribe to the SDI Society channel on YouTube. It's free, it's simple, and I'll really be grateful to you. Now, tomorrow we'll hit the ground running with some tips on finding great note investments. You're going to love it, I guarantee it. Until then, my friends, invest wisely today and live well forever.